SanDisk, the biggest maker of flash memory cards, reporting third-quarter earnings and coming in almost 5 times higher than estimates of 18 cents a share, with an actual number of 99 cents per share. Now, third-quarter sales were up by 14% to $935 million. But can SanDisk actually reach the $1.1 billion they are predicting for the fourth quarter? Joining me now is the Chief Financial Officer of SanDisk, Judy Bruner. And Judy, thank you very much for joining us.
Thank you, Betty. Good morning.
Well, before we talk about your results and also about the outlook for SanDisk, I've got to ask you, because you're a big technology company, and this has been going on with Galleon, which has been investing and trading in various technology companies. Given this blow up with Galleon, is there any involvement with SanDisk? I mean, have they traded? Have they invested in your company? And what have you been able to respond on that front?
I do believe Galleon has owned shares in the past in SanDisk, but really there's no involvement on our part. We're very focused on running our business and delivering our results.
Okay, all right, fair enough. Judy, let's get to your results then. You mentioned in your report that you're seeing some demand, and it looks as if there's some rebound going on right now in your business. Are you seeing real demand, or is this demand being carried over from the prior quarters?
We're seeing very strong real demand. As you said, we reported $935 million in revenue. Our revenue was up 14% on a year-over-year basis, 28% sequentially. We saw very strong growth in our OEM channel, particularly from the mobile handset market. This is the use of flash memory in mobile phones, and we saw strong demand for high-capacity flash memory in smartphones. We also saw strong demand for lower-capacity memory in entry-level phones. So that was the biggest driver of growth for us in the third quarter.
Judy, there's no question the street is hot on your stock today. Continuing a theme of the year, you're now up about 140% in terms of the stock performance, the fourth best performer in the Philly Semiconductor Index. It is at times like this, after big run-ups, that the analysts in certain cases start to wonder what can come next. Think Equity had a note today suggesting perhaps this is not the best time to start buying your stock if you missed out on the rally. What is your response when analysts raise those types of concerns?
I would say that, flash is really becoming ubiquitous. It's at the heart of many, many different mobile products, and we believe there's lots of growth ahead. And SanDisk is uniquely advantaged in the balance of our business between retail and OEM channels, the balance geographically around the world, and also the fact that we service all of the end markets for flash memory. And in addition, we have a strong brand equity, and we have captive supply, very low cost, very high quality, leading edge captive supply. So we think we're in a very strong position with growth ahead.
Hey, Judy, it's Adam. Phenomenal quarter by any measure, whether you compare it to the previous quarter or the same quarter a year ago. 98 cents, but for next quarter, analysts are saying just 33 cents. Are the analysts just way cheap, or is there actually something coming up that is an issue?
Well, we did have a couple of one-time benefits in the third quarter, in addition to very strong underlying profits. But we did benefit in the third quarter from selling some inventory that had been previously reserved. And on a GAAP basis, our tax provision is also quite low at this point in time. But really, the underlying growth in profitability was very strong.
Okay. All right, Judy, thank you so much. That's all the time we have. Judy Bruner, SanDisk CFO.